Hello everyone. We are from VC Potential Company, a small consulting firm. Today our video purpose is to obtain the business from David Jones by providing advice about expansion, diversification, and restructuring related to its strategic development in the next 10 years. The macroeconomic headwinds show that past several years was the worst retail sales growth environment. So how to strengthen the core business, transform the company, and grow the store network would be the problem for us to figure out. So firstly, let's pass to the senior consultant to talk about our recommendations.
Okay, for rebranding David Jones, our recommendation take 2 steps. First, divesting the underperforming assets, which help company to reduce loss and debits and use the capital to focus on the main business. David Jones already transformed from the offline physical store to online and offline joint stores, but the growth of the online market has not fully offset the decline in the physical market. And David Jones need to consider divesting underperforming assets. However, ethical issues also need to be taken into account during this time. Secondly, reallocate the additional funds and the stop-loss funds. Allocate funds from the divestment and the stop-loss project to other areas of business, and investment in the existing area to improve existing capacities. Based on our SWOT analysis and financial facts, I will pass to our consultant to continually talk about the digital market solutions and how to expansion and where to invest more money.
So, as the financial consultant of the Vested Potential firm, it's my duty to elaborate some of the points about the David Jones financial aspects. So, after a 29% fall in the operating profit to 84 million in December half, David Jones' profit fell 49.6%, which is 64 million in the 12 months ending June as rising costs. And also the department store earnings dropped 58% to 45 million. While financial service earnings were flat at 19 million, and also the business reported a 1.1% lower gross profit margin compared to the 2018 financial year due to an increased focus on clearances and higher markdowns according to the company. And the main reason for the drop down of the profit could be through the $400 million refurbishment expenditure on the Flagstaff store. This store is partway through a $400 million refurbishment set to finish by March 2020. The company said the refurbishment had hurt sales by 3% in the second half of the 2019 financial year. Also, the Woolworths Holdings has written down the value of the David Jones by 437 million.
So after conducting a SWOT analysis, we found one of the threats to be the highly competitive online retailing world. So as the digital marketer, I found when it comes to digital experience, David Jones lackluster. Compared to other online competitors such as ASOS and The Iconic, David Jones struggles as they sell at a higher price as well as charging for their shipping and returns. David Jones even tend to be longer than some international brands at delivery. In addition to this, David Jones operate on an old website that is poorly formatted and at times frustrating to use. As major competitors are now providing free shipping and returns and almost next day delivery on websites that offer chat functions, David Jones should look at this as an opportunity to create a higher user experience through its online retail store and ultimately look at boosting more sales online. By doing this, they will also reduce idle stock expenses that may be associated with their stores that they currently operate. By focusing more on their online retailing, David Jones can also reduce their costs associated with utilities and resources that are associated with their physical stores. Their online website means they are able to reach many more customers, whether they are return customers or new customers, and create greater opportunities where the store operates 365 days a year for 24 hours a day.
Okay, I'll talk about the expansion of David Jones, which divided into the brand expansion, service expansion, and international expansion. And the brand expansion is the globalization leads to the increasing in the brands and competitions from other countries. Instead of being a competitor, David Jones found the opportunity of win-win situation by cooperating with more international suppliers, evidenced by the introduction of 300 new brands over the past 26 months. And the service expansion is a physical store is an experiential center where the customers can interact with the brand, and despite e-retail provides choice, convenience, and access, face-to-face customer service plays an important role in the retailing industry, allowing customers to touch, feel, and take products back home fast. The last one is the international expansion. The David Jones will open its second store in the New Zealand, opening its first Auckland store as part of the over 720 million redevelopment at the Westfield New Market.
For the investment part, our film suggests there is 4 aspects to invest in. The first one is improve private labor. The current David Jones private labor merchandise is okay but not fantastic. The quality could be improved to enable to compete with specialty stores and international fast fashion chains such as Zara. Second one is add more unique products or brands. David Jones can invest more money on securing exclusive brands and sell products only available at David Jones. Besides, David Jones should increase investment in technology capabilities to improve their online sales. Finally, David Jones can further invest in customer service and in-store experience, such as invest in staff and training.
Lastly, in response to our SWOT analysis, we conducted that David Jones should maintain the strengths, which are the strong domestic presence, and invest more money on customer service. Then cover the shortage according to expansion and develop the online market. David Jones also needs to invest more money in private labels and expanding in terms of brand and services to grab the opportunity. That's all for our presentation. Hopefully, we have good cooperation in the future. Thank you.